Hey, it's David Shelton, broker at Century 21 Advantage. We're so happy to have in the studio with us today, and the studio's in our office, Josh Osborne, Cross Country Mortgage. Josh is not new to Sioux Falls or to mortgage lending. Cross Country has made it across the country to Sioux Falls, a major announcement, and we wanted to get Josh here with us to talk to us about loan products. There are a lot of changes coming up January 1, 2020. So we're going to talk to you about specific loan products, and here we go. Thanks for coming in. Let's talk a little bit about new construction and homes that are starting at about $550,000. Yeah. I represent Kelly Construction on a lot of new home construction, as you know, here in Sioux Falls, and we kind of start at $550,000.
Yeah.
So tell us about the financing that that you could provide at that $550,000 number.
Absolutely, and the thing about Cross Country Mortgage at my mortgage company that we have here in Sioux Falls is that there's a lot of great financing options for people that are looking at new construction. And new construction nowadays, you're typically getting into that 500, 550, 560 price range. The great thing about that is that starting January 1st, 2020, the conventional conforming loan limits are going up. And they're going up for allowing people to be able to borrow more money and put less down in their house. So, for example, January 1st, the conventional loan limit is going to go up to $510,400, which means you can take out a loan up to that amount and be able to do a 30-year fixed mortgage.
So you could buy a home at like $560,000, put 10% down, and be at that conforming. What is conforming? What does that mean? I'm a nonconformist,
right?
So I've got to know.
I know you are. Well, conventional conforming is basically a loan program that's under the jumbo limit. And the jumbo limit basically takes it into a different loan program that allows you to be able to go above that conforming limit. So the conforming limit is just the national standard that Fannie Mae and Freddie Mac sets for their guidelines on how much a loan you can actually take out before it goes into that jumbo loan limit.
So conforming means that it's insured by Fannie or Freddie, really. That's kind of the deal. So the limit's been set. 10% down, that's pretty cool. So many of the homes that we bring on the market, Kelly Construction and otherwise, that are below that 560, probably above, well, it goes all the way down, right?
Yeah, it really does. And on a conventional loan, really the minimum you need is 5%. But if you're buying a house for $600,000 and you put down 5%, you're not going to be able to get down to that $510,000. So a lot of the times, if you're underneath that $510,000 loan amount and you can put down 5%, that's perfect. And if that works, that's wonderful, because we can lend on a conventional loan up to 95% loan to value.
Wow. Didn't it used to be 97%? There was a 3% conventional loan at one time. So things change in the mortgage industry. You need to have someone that you could speak with that is reliable, that's going to give you the goods, that'll really custom design or bring to you a platter of loan products that you can choose from, and he can recommend the one that's probably going to be the best for you in your circumstances, and be a home run, so that when you make an offer on a home, you know that you're going to be able to stick with it. If you need to sell your home before you can purchase a home as well, all those parameters, we make it easy as we work together. Our communication is incredible. And so make sure that you give Josh a buzz, and he'll run down through the numbers with you, and you can have that confidential conversation with a qualified lender. Super important. And then you can have that confidential conversation with us as your realtor, and we're going to keep that information confidential, your information confidential, and help guide you through this process, and you'll be a winner for sure.
Absolutely. The process doesn't have to be a hard one if you're working with the right people.
Josh, you were telling me earlier about the turnaround time with Cross Country Mortgage, and you're blown away by how efficient they've made a process that doesn't, when I think of processing, I grew up as a meat cutter, and so we processed hamburger, and you know what it started out and what it came out as. So, and sometimes we feel like when we go through a lending process that we're being ground up.
That it can drag on.
Yeah. And so how does Cross Country, whether it's a jumbo loan or just any of the other loan products, how are you different?
Right. Well, every loan program is going to be a little bit different, but on 95% of our loan products, we are very, very fast when it comes to the start to the finished end product. What we like to do is make sure that one, when we are working with clients that are taking their application to get pre-qualified, we actually gather all their income documents right away and we run them through what's called our fast track approval. And if we run them through our fast track approval, whether they're buying a $550,000 house or a $200,000 house, we guarantee that we can close 10 days after you go under contract.
Wow.
Which is very, very cool.
That's smart.
And if you can't go through the fast track approval, pre-approval process, say it just doesn't work out with time frame, we're super fast. And that's one thing I love about Cross Country is that they have everything dialed in so detailed where with our processing when we send in the files into underwriting, we're getting files underwritten back within 24 to 48 hours. And typically that's about 20 to 25 days prior to closing. So we're clearing our files. We're making sure the customer experience is at the top end of the spectrum to give the clients really a good feeling, because when you're buying a house, the last thing you want to do is stress about is how to get the loan officer more income documents or pay stubs. We clear everything so fast that prior to closing, all you're worried about is packing and scheduling everything at your
Making
home.
your move.
Yeah,
making
right?
your move,
which is wonderful, and that's the way it should be.
So if I'm a seller and I'm looking at a pre-approval or pre-qualification, you can explain that in a few minutes, and we're thinking about whether we accept this offer over another offer. What can the Cross Country offer provide me as a seller that perhaps another pre-qualification letter wouldn't do?
Right. Well, with our fast track approval letter that we have, that basically states that you are pre-approved. And pre-approved means you're approved by underwriting based off of your income documents, your bank statements, your tax returns, your pay stubs. We've gone through everything like you're going to close tomorrow. The only thing that we're waiting on is probably the appraisal, title work, survey. So there's a few things that we don't have until you're under contract, but that letter is so strong because it shows you, the seller, that this buyer, as long as your house is going to appraise at what you're buying it for and there's no liens or anything like that on the title work, you're going to be a-okay to be able to sell that home to them and be very confident that your buyer, that buyer is going to be able to close. Now, if you accept a pre-qualification letter, that basically means that the customer maybe has talked to a bank, taken their application, and you do not know if they provided any income documents. You don't know if their income is what they say is different than what they've actually can provide. So it is really a coin toss if that's going to work or not. And 65% of the transactions right now that are closed right now, or actually people are wanting to buy a house, I would say 65% of transactions end up going very rocky or not very smooth because lenders are not pre-approving clients up front. And that really does cause an issue because the sellers, they don't know anything about the buyer. Right. So that pre-qualification letter is basically just a letter saying that maybe they'll buy the house, maybe they won't. So it's a guess.
It seems like it's a way for lenders to kind of put a big net around a lot of people.
Yeah.
And fill a pipeline maybe.
Without doing a lot of work.
Right. And then we just have turbulence all the way to closing.
Right.
And so
yeah, that fast track is like your first class service. I mean, that's the thing. Yeah. We're putting them at first class. We're taking care of them and taking care of you as a seller because you know for sure your house is going to probably sell.
Yeah. Well, I tell you, if I'm representing a seller and I have a pre-approval from Cross Country Mortgage versus a pre-qualification from anyone else, we're going to look hard at that pre-approval.
Absolutely.
Because of that, and I think it's really something for people as sellers to think about.
Yes.
In this day and age, both in 2019 and coming up on 2020, so many changes in the marketplace.
Yeah, and guidelines are always changing, loan programs are always changing. So, they might have a great loan officer back behind them, but still something might change where that person didn't see something, the T's weren't crossed and the I's weren't dotted, and all of a sudden you have a borrower that looks great, but it's not approved. And that happens, and so we want to make sure that at Cross Country, we have the underwriters who review everything and that client is really taken care of, and we make sure that it's a good experience for them and also a great experience for the sellers.